Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is cautious optimism, fragile progress. The stalemate between US and Iran extended into the week, and oil prices remain elevated. While tensions were initially eased at the margins after Pentagon said it destroyed 90% of Iran's naval mines and over 30 ships were allowed through Hormuz last week, the Trump-Xi summit revealed little progress on the Middle East situation, sending Brent crude above US 109 per barrel. Notably, the rise in yields came in the form of a bear steepener to reflect worries about longer-term inflation expectations, alongside a rout in ultra-long JGBs. On the trade front, China is said to have agreed to purchase 200 Boeing planes and US $17 billion of agricultural goods from the US. However, the full scope of concrete outcomes or agreements remain unclear. Away from geopolitics, inflation data dominated the macro narrative. US April CPI reaccelerated, with the energy index accounting for over 40% of the increase, with signs of cost pass-through broadening into services. The US PPI also surged more than expected. Against this backdrop, Fed officials struck a consistently hawkish tone, with inflation being the primary concern and signaled no urgency to cut rates. In Asia, China's inflation data told a similar story of building upstream pressures, with both the CPI and PPI rising faster than expected. As such, we see reduced scope for broad-based monetary easing, with only a 10 bp rate cut expected in the fourth quarter of 2026. Elsewhere in EM Asia, Indonesia and India, whose currencies have been among the top underperformers since the US-Iran conflict, are deploying a wider range of FX stabilization measures, but the scale and nature of intervention signal policy strain rather than conviction. For the week ahead, markets will be watching for further signs on the accessibility of Hormuz and whether US and Iran can come to an agreement. FOMC meeting minutes are due, but they are unlikely to offer surprises given Fed officials' vocal hawkish messaging. In EM Asia, we have a tight call for Bank Indonesia to hike its policy rates by 25 bips to add further backstop to rupiah depreciation pressures. Q1 GDP upside availed policy space for this tightening amid rising pipeline price pressures reflected by producer and wholesale inflation. For Thailand, Q1 GDP is expected to expand moderately. Domestic demand and investment appear firmer at the margins, but the US-Iran conflict imposing drags on the tourism sector portends slower growth momentum ahead, keeping the Bank of Thailand rate hold as the base case. All in, initial geopolitical optimism proved short-lived, with the absence of concrete progress between Trump and Xi and a renewed uptick in tensions, while sticky inflation and EM Asia currency pressures continue to narrow the path to a durable resolution for the US-Iran conflict and markets. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.